Good afternoon, everybody. I hope everybody's doing well. Looking forward to this presentation. We are actually live on Facebook as well, making sure that we get this information out to anyone and everyone. So looking forward to this. We won't have a large group today, which is going to be fine because we want to make sure we get all of your questions answered. Once again, chat room, and if the actual presentation or the stays small, we will open it up for questions. Be mindful of the questions. One thing that I will tell you is that right now, a lot of the banks that are participating in the Triple P, they are determining exactly what they will be receiving, asking of everyone that's going to be applying and so forth. Senan will be covering some of that information. I've been working with Senan for about 10 years now. Senan was actually one of the graduates of a program that is sponsored by the SBA Emerging Leaders Program. And the focus of the program is to make sure that we help small businesses. So we select about 20 business owners, and in working with these 20 business owners, what we do is that we help them scale within 7 months. And Senan participated in the program about 2014. So Senan has been reading the entire 800 pages of the CARES Act, and he's also reading all of the addendums that keep coming out. So without further ado, I'm actually going to pass it on to Senan.
Awesome. Thank you, Orlando. Good afternoon, everyone. So as Orlando mentioned, there have, obviously we know the CARES Act came out, and there have been some changes. A lot of the changes took place on Thursday night, just before the rollout, which is probably why anyone who was applying for the PPP, the Payment Protection Program, have been delayed or haven't really got anything processed, because a lot of the banks got a little scared when they started to make a lot of changes, and some of the changes were rather significant. For instance, the loan period originally was 10 years. Now it's only 2 years. The interest rate flopped around 3 different times. First, it was supposed to be less than 5%. Then it became less 0.5%. Now it's 1%. So a lot of the banks are still trying to figure out the rules and their responsibilities in terms of making sure that compliance is done, while at the same time, of course, trying to process applications. If you have already attempted, you may have run into a queue system, or you could be having a situation where your bank is requiring that you have a bank account or some kind of relationship with the bank prior to applying. So these are all things that, quite frankly, are bank specific. However, majority of the banks still are trying to get clarity. So there may be some delays that are taking place. I know there are a few banks that have already started processing these applications. They're usually more of your credit unions and the smaller banks who don't have to deal with a lot of the different requirements, if you will, with respect to, let's say, a larger bank or a regional bank. So you'll probably see them doing these applications a little bit more. Orlando, are you going to be running the slides today, or am I doing the slides?
I'm going to share them for you. I already have them. I have it up.
All right. So while Orlando sets that up, the presentation that we have today, it's going to go into the benefits. But before we go into that, I do want to go over, I know that there was a session on Friday, I believe it was, or Thursday, that discussed the PPP loan program, the EIDL, as well as the Florida Bridge Loan. For those who attended, you got to hear those different packages and the benefits of the three. Now, keep in mind, these are loans. One of the things that you realize that people don't appreciate is that there is the loan aspect, and then there is the grant with respect to the EIDL, which is a disaster loan, and the forgiveness portion with respect to the PPP. You have to actually, when it comes to the PPP, you'll have to actually apply for. We're going to get into that in the presentation. But what I want to make sure you understand is that there's the loan, and then there's the forgiveness or the grant, which we're going to get into with the presentation today. They're completely different sets of situations. So I want to make sure that's clear, because you could get both the grant, you could get both the loan forgiveness, and you'd still have a loan to pay. All right. So But without and by the way, this presentation, and I want to apologize. Unfortunately, I've been in quarantine, and due to that fact, I have been limited in my resources. There were changes made to this presentation. I have tried to make the changes to this presentation. Unfortunately, my systems are not as sophisticated at home apparently as they are at the office. So there are some changes in here that have not been made since the Thursday announcement. So, and I've been trying to do this all weekend long, and sadly, I have not been able to. So, what I'm going to do is for um, everyone who reviews this, I'm going to go ahead and update the slides verbally for what's in there. And then hopefully, once I'm out of quarantine, which should happen this week, I'm going to be at the office. I'm going to be able to make the changes there. And then I'll send an updated presentation to Orlando. And of course, anybody requested can get a copy of it. But without further ado, Orlando, if you can go to the next slide. So we're going to be discussing 6 topics today. We're going to be discussing the loan forgiveness as it relates to the PPP. We're going to be discussing the emergency grant as it relates to the disaster loan, the business payments of student loans, the tax redemption credit for payroll, deferment of payment of the payroll taxes, and then, of course, net operating losses. So let's go to the first slide and let's get this started. So for just a quick rundown on the Paycheck Protection Program, and I'm going to do the same thing when we talk about the emergency grant with respect to the disaster loan. So this first starts out with a payment protection program. What is a payment protection program? This is designed to help businesses who cannot afford to keep payroll. Okay, the main purpose of this is payroll. However, they are allowing additional expenses, which we'll get to in one of the upcoming slides. Now, unlike the disaster loan, which you'll hear about later on, this is under what is known as a 7A program. That means that when you're looking to apply for the Paycheck Protection Program, you will have to apply through a bank. That's why I mentioned a lot of the things that are going on with the banks. Unlike the disaster loan where you're applying directly with the SBA, this is what is called a guaranteed loan, meaning that the banks don't have any loss per se or any risk because it's guaranteed by the SBA, but the SBA will not be writing the loans directly. The SBA only writes disaster loans directly. So you would apply with the bank. Now, the normal 7A loans, in case some of you have been researching it, are left up or required you have at least 2 years of operations. However, in the case of this Paycheck Protection Program, and I'll be referring to it as a PPP because that's honestly what it is, you no longer need to have 2 years of operation. You only had to be in operation before February 15th of 2020. So long as you were in operation before February 15th of 2020, you qualify for the PPP on that front, okay? Now, that means it's available for startups. That means it's available for companies, again, who are less than 2 years in operation, all right? So that's a very important note. And the maximum loan amount is 2.5 times your payroll monthly cost not to exceed 10 million. Now, a lot of people have asked me, well, what if I have no payroll? Then this loan is probably not for you, okay? Because you must have payroll. The main premise behind the PPP is payroll expense coverage. If you have no payroll, you would not qualify for this one, or you can get approved, but you're going to be approved for $0 because the basis of this loan is on your payroll. So if you have no payroll, you're out of luck. Okay, so it's very important to understand with respect to the PPP. Orlando, next slide. Now, before we get into what's forgiven, I want to know what's covered within the PPP. One, payroll costs, as I mentioned. Now, this is one of the first changes that came down. The original payroll costs included independent contractors, 1099s, in your list. Now, obviously, we all know that, or those, I'm sure no one on the call or on the webinar are breaking this rule, but 1099 are not employees. They are independent contractors, and anybody who's treating employees as 1099 is actually violating federal law. The federal government recognizes a lot of people that are violating the law, but right now their goal is to get money in the hands of people. So they're going to somewhat overlook this and let you include that, or they were. Now they're not. They went back to their original position, which is if you have payroll, meaning you take out taxes, you issue a W-2, those amounts are the payroll costs, okay? They also include vacation pay, paid leave. These are also considered payroll costs. Any type of fringe benefits are also considered payroll costs. Now, Couple of changes. It used to include employment taxes. It no longer includes employment taxes. Okay, so employment taxes is no longer a payroll cost. All right. Also, you were automatically disqualified at one point for individuals who earned more than $100,000. Now, what they're saying is those individuals who earn $100,000 are capped at $100,000. I mean, you can include those individuals, but up to 100. No payroll cost under this program can exceed $100,000 for any employee. So keep that in mind. Okay. Now, and apologies if I look down, because since that's not on the slide, I have to look on my cheat sheet, so to speak, with respect to these items. Now, the other item that's included, payment of interest on mortgage obligations entered into before February 15th. That's true, but it's now been expanded. Any interest on any debt obligation before February 15th can now count. All right. And if you get a disaster loan and you wish to refinance it to put it under the PPP, you can do so. Okay. Why would you do that? Well, although you have terms in terms of a time frame to pay it off are longer in a disaster loan, the interest rate is 3.75. The PPP is at 1%. If you plan on paying this back within a 2-year period, then you might want to go with the PPP because you pay a lower interest rate. So that's something to consider. Now, one important distinction: if you applied for the disaster loan and you included payroll within your disaster loan in terms of calculating the expenses in disaster loan, you automatically must refinance it into the PPP if you apply for both. Okay, you don't have to apply for both. You can apply for one or the other. You can apply for both as well. Just remember, you can't double dip. You cannot get funds for the same expense in both. And if it comes to payroll, you will automatically be rolled into a PPP if you apply for both. Okay. Payment on any rent covered obligations before February 15th, those still count. Okay. So if you have any rent obligations before February 15th, such as a lease or anything, they do count. Okay. A question was asked in a prior webinar: what about home office rent? It's still not clear on that as of right now. Okay. This is primarily for business rent, for sure. If you have a home office, that's one where we'd have to leave it up to clarity from the SBA. The banks might have a little bit more clarity on their side from a compliance standpoint, but as of right now, the most recent information, we don't have clarity on that. So err on the side of caution, if you will, on that one. I leave that up to you. And the last one, of course, is you have any covered utility payments that started before February 15th. That doesn't mean that if you incur them after, that you don't get to get them. It means that it must have been an obligation that began. For example, you had electricity prior to, and you're paying it, that's included. Okay. And it also appears that if the company is paying for those cell phones, you can get that under the utility payment as well. But you'll notice there are other fixed costs that are not included here, such as insurance. That is not part of this. If you have other fixed costs, then my recommendation is to apply for the disaster loan for those expenses if you don't want to apply for the PPP, or if you're applying for the PPP. Now, the deadline to apply for this loan is June 30th. Okay, so you must apply prior to June 30th. It's a difference from the disaster loan. You have until December to apply for the disaster loan. Okay. And again, you must have been in business prior to February 15th. Now, and just give me a second. I'm just going to go through my items. The payments are deferred for 6 months. So you don't have to worry about making a payment on this loan for a period of 6 months from the start of the loan. Okay. So keep that in mind. This is, of course, designed to help you. Now, for the forgiveness element of the covered expenses, keep in mind the loan itself can be for a longer period, okay, because it's up to 10 million based on 2.5 times your monthly payroll costs. Not your monthly covered expenses, your monthly payroll costs. Okay, very important. You're only forgiven up to 8 weeks. Okay, very important to know that. It's only for 8 weeks. It is not for any period longer. That may change. The Congress may invoke it to extend it, but for right now, it is only the first 8 weeks. For the forgiveness aspect, they will make a comparison. And Orlando, can you go to the next slide? Now, the loan forgiveness, they will base it off of one of two comparisons. First of all, it's your average number of employees, either from the same period in this year to last year. The period this year that they use is when your loan starts. So if your loan were to start today, April 6th, they'll go 8 weeks from that point, and then they'll compare it from April 6th of 2019, 8 weeks from that point. And if your average number of workers are roughly the same, or should I say the same one-to-one, there will be no reduction in the loan forgiveness. If that reduction has significant, of course, that significant amount will be changed. If you weren't in business last year, it will take the first 8 weeks of this year, and they will compare. Okay. Now, for those of you who say, well, I had to lay off employees, I don't have them back yet, I need to hire them back, that's not a problem. If you hire them back by the time the 8 weeks is up, it will not count against you. Okay, so that's a very important point. All right. Your salary pay must be in the at least 90% of what those two period comparisons are. So if it's last year, the first 8 weeks, it must be 90% equal to those amounts. So keep that in mind. This is not an opportunity to give a pay cut. It's of all having the number of people that you need. Okay, so keep that. Now, the amount for the forgiveness, 25% of that amount, or better said, 75% of the total forgiven amount must be, at minimum, must be for payroll. That means that the 25% of the forgivable amount is a cap on non-payroll costs. What does that mean? That means that rent, interest on debt, utilities, the capital that getting paid. 1099s, the 1099 individuals, okay, who want to apply. Let's say you have individual recipients that have 1099s. They themselves would apply. I lost you for a second. So Orlando.
All right, we're on the same page, the same
Okay.
slide.
Okay, so remember that for 1099s, the recipients in those scenarios, because I'm sure you're asking yourself, what do I do with people that had 1099s? They themselves have to apply. They start applying this. You can apply themselves for the PPP, okay? So just as an FYI for those individuals, but you as a business can only include W-2 individuals and any fringe benefits that go along with it, not employment. Now, presuming you meet the requirements for the loan forgiveness, the debt up to 8 weeks is canceled. It will not be treated as a cancellation of debt, so you won't have to report it as income on your taxes. It will not be reported to the credit reporting agencies as being in default. In fact, it'll show current because the SBA in that situation will take over that loan and they'll pay it on your behalf. And by law, they will not be able to treat it any differently, that being the credit reporting agencies. Now, I write this down regarding the forgiveness application. There will be an application to apply for the forgiveness. Forgiveness is not automatic. You will have to actually apply for the forgiveness, and that will not happen until after June 30th. So don't try and apply for it after 8 weeks. You have to wait until after June 30th. There will be an application. That application isn't out yet. It's still being prepared. There will be documentation that you'll have to provide verifying all the information I discussed as far as the comparisons of the payroll, comparisons of the numbers, and so on and so forth. That documentation must be prepared. The banks who are preparing your loan for the PPP, they will provide guidance on this information. We may even have a webinar at that time when more information comes out regarding the loan forgiveness application process. Orlando, next slide.
Then, can you cover the first two sections, points, bullet points, just because you were fading in and out?
Okay, so the total loan forgiveness amount will be canceled. Okay, so basically that means that amount you won't have to worry about paying, and it won't report as a cancellation of debt or income on your taxes. So you won't have to worry about reporting it anywhere. And the credit reporting agencies cannot write a negative report regarding that. it will show as current, and the SBA will take over those payments. It won't show paid off because those 8 weeks the SBA is still making the payments on. They have until 2 years to make those payments to the bank. So it won't be a negative reflection on you. It won't have any negative impact those 8 weeks, presuming you meet the requirements of the loan forgiveness. Orlando, next slide. Did you need me to go over the rest, or that was okay?
No, that was okay.
So the emergency grant. For those who attended, you remember hearing about the disaster loan. Okay. Oh, one important point about the PPP, no collateral is required. Okay. So you don't have to put up any collateral. It's an unsecured loan. Okay. The disaster loan that's offered by the SBA, it is applied directly with the SBA. All participants can apply and have been able to apply since March. Okay. There is collateral requirements when you seek funds exceeding $25,000. You have to have been in business prior to January 31st, a distinction. Loan terms can be up to 30 years at 3.75% for for-profit businesses. Non-profit businesses are 2.75. There are some rules regarding the type of businesses that can apply for it and which ones cannot. I'm not going to get into that in this presentation. I'm sure Orlando has the webinar on that front, and you can always review it there. But these are the type of businesses that can qualify. Very important point. The PPP and the disaster loan, these are designed for small businesses, meaning you have to have less than 500 employees. You have to, of course, both businesses must be physically located in the U.S. The employees must be physically located in the U.S., so on and so forth. Okay. Now, with the disaster loan, you get you have the potential to get an emergency grant up to $10,000. This is with the grant. Okay. This is not with the PPP. So don't think, oh, you get the grant and the PPP. No, it's two different things. Okay, so if you're looking for the grant, you go with the disaster loan. Now, the disaster loan is not based on payroll. It's based on your fixed expenses. Obviously, payroll can be part of those fixed expenses. But as I mentioned, you can't double dip. You can't get benefit in one and benefit in the other. So whatever you apply for in the loan, in the disaster loan, it hopefully is what is not included in the PPP. Okay, such as I mentioned, insurance being one of them. Okay, again, you can apply for these items within the disaster loan. You have up to 30 years. So it's in terms of payback ability, the disaster loan is a little bit better. Okay, obviously you're paying a lot higher in interest rate. All right. And again, just excuse me, I was checking my my credits here. Okay. The only requirement that I have to mention again is you cannot double dip. Okay, you cannot double dip. If you knowingly misuse these funds, it will be a criminal infraction. Okay, so keep that in mind. And the federal government has the right, if they give you money, to audit your information to make sure that you are accurately using your goods, these funds. Also, another point on the loan forgiveness, there is no personal guarantee required. Okay, so keep that in mind as well. If you're wondering, you do not have to give a personal guarantee for the PPP. All right, Orlando, next slide. Now, the emergency grant must be for an allowable purpose. Okay, again, its examples include providing paid sick leave to employees, maintaining payroll, increasing costs for materials, making rent payments, repaying obligations for that cannot be met, insurance, utilities. There is some overlap with the PPP, but the disaster loan is more encompassing. So you have more things to use it for. So how you choose to apply for these loans, one or the other or both, that is a decision that you need to make. Orlando, next slide. Now, the grant portion does not need to be repaid if you were denied the loan. So the way it works is or supposedly it's not supposed to work. You apply for the SBA disaster loan, you seek the grant, you're supposedly going to get the grant funds in 3 days, the amount they've determined that you're entitled to, and let's say you subsequently get denied for the loan. Do I have to pay the grant back? No. You get the grant money, you're denied, you keep the grant money. Okay. Again, you still need to ensure it's used for the purposes mentioned. Don't presume that, oh, because I was denied, that it's free money, I can do what I want with it. No, you are still expected to use the money for what it's for. Okay. Now, this is very important. If you do apply for the PPP, and let's say you do apply for the grant, and you apply for forgiveness for both, one or the other will be reduced depending on which one you apply for first. Okay, so if you apply for the disaster loan and the grant, and you get the grant money, and then you get the forgiveness in the loan, and they notice they gave you grant money, they're going to reduce your forgiveness amount by the money you got in the grant. Okay. So again, this is not an opportunity to get two double dippings of benefits from the government. The government's only going to give you forgiveness up to one. So if you get 10,000, let's say you get the 10,000 max of the emergency grant, and let's say your forgiveness amount is $20,000, you're only going to get 10,000 of the forgiveness because you already got the 10,000. Okay. So keep that in mind. All right. Orlando, next slide. Now, regarding the student loans. So previously to this law, you could deduct certain payments. You could pay for certain items of your employees, that being for school-related expenses, tuition, school books, things of that sort. Student loans was not one of them. However, for this year 2020, they are allowing employers to pay their employees student loan payments. Now, for those of you who are business owners and are also employees, which would be good job, that's what you're supposed to be. You're supposed to be an employee if you're working in the business. This is not necessarily going to be beneficial to you. Why? Because if you own at least 5%, this is only for employees who own at least 5%. If you own less than 5%, this doesn't apply to you. But if you own at least 5% of the company, the total amount paid for student loan payments cannot exceed 5% for your payments. So let's say you have 3 employees, and you business owner who are more than 5% owner are one of those employees. And let's say the other 2 are not more than 5%. Let's say they don't own anything. And let's say you have, let's say the total amount is 100,000 in student loan payments for the year. Okay. 5% of that, or $5,000, is the cap that can go towards your student loans in that scenario. Okay, so keep that in mind. Now you say to, well, what happens if I'm the only owner? That means it'll only pay for 5% of my student loans. No, that means it pays for 0, because the total amount that will be paid for student loans is 100 that will come from you, because you're the only one who has student loans. So keep that in mind. So this is really designed to help employees, not business owners. All right, Orlando, next slide. All right, so the payroll tax redemption credit. This is another option for you if you're looking to get a benefit from the government, and maybe you're not looking for a loan, but you need some short-term help. This is a credit. It's up to 50%, and it's based on qualified wages, which is not to exceed $10,000, and it is limited to Social Security. So you can deduct up to 50%, not to exceed $10,000. So $10,000 is the cap, okay, of qualified wages to reduce Social Security. Okay, now, if the dollar amount is such that it exceeds the overall taxes due to where now your taxes is 0, you can use the remaining balance as a refundable credit, meaning that if there's money, if technically there's money left on the table after you factored in the credit, that can be a refund to you, or better said, to the business. All right, next slide, Orlando. Now, in order to take advantage of this credit, this is how it works. It starts in the first quarter of this year, whatever quarter that is, where you saw a drop in 50% of gross receipts from the prior quarter. And it ends when you have at least, or you're gaining at least 80% of the gross receipts you had in the year prior quarter. So in other words, it compares, let's say you're starting in the first quarter of this year, you're going to compare your first quarter of this year to your first quarter of last year. And then if it's 50% drop, you can take the credit. And if the credit stops when the subsequent credit that you calculate, you compare it to the last year's period, and it's at least 80% of that credit, you can no longer take the credit. Okay, pretty self-explanatory there. Next slide, Orlando. Now, there are some rules with the employment tax redemption credit. Okay, first of all, you must have received a hardship because of the coronavirus. One thing I didn't mention at the very beginning regarding all of this, of the CARES Act and the disaster loan, your loss must be directly related to the coronavirus. If you were suffering a downturn that had nothing to do with the virus, and the virus comes around and you're like, hallelujah, great, I have something that I can get a loan from, not going to work. They're not going to apply to you. And when you submit your documentation, if you try and lie, first of all, you're committing perjury because you're staying under oath that these information is fact. But if you submit it anyway, you'll be rejected because they will determine that your loss started prior to the coronavirus. Okay, so keep that in mind. Now, you cannot pay your employees more than you were for this credit, more than the amount they received 30 days prior. So in the 30 days prior, if they were paid X amount, they cannot exceed that during the time frame that you're taking advantage of this credit. Okay. If you receive a loan under the PPP, okay, and you get the forgiveness under the loan, you will not be able to qualify for this credit. So keep that in mind. All right. If you apply for the PPP or whatnot, you will not be entitled to this credit. So the PPP, loan forgiveness, is off the table. So you have to choose between this or the PPP. Also important, if right now we're in April, okay, so this is the time to prepare your 941s. If you're preparing your 941s, you already know you meet the qualifications. You've lost 50% of gross receipts from a year prior, from the same quarter in the year prior, and you know what your credit is going to be. You can go ahead and calculate the credit now. Let's say you have a payment due, a monthly or a monthly deposit or quarter depositor. For example, the third quarter is 15th. So the third month is doing the 15th. So you're a monthly depositor, and you calculate that based on your credit, the next deposit will be reduced by, let's say, $2,000. You can go ahead and reduce it by $2,000 and not have to worry about the difference. Okay. Or you could pay it and then get the money back in a refund. It's entirely up to you. Okay, so you have that flexibility with respect to this. Next slide. Now, let's say you're not really looking for a loan. You're not really needing a credit, but what you do need is a little bit of cash flow. Okay, what the government is going to offer you without penalty is for you to defer your payroll tax payments that are due until the end of this year, which means that all your tax payments that are due this year, if you make them by the end of the year, you will not be penalized. That does not apply for payroll tax returns. That's for the payments themselves. Keep that in mind, it's a distinction. Now, there has been no mention of an interest-free loan, meaning that if you are late, they won't charge you a penalty, but they have not said whether they're going to eliminate the interest. So as of right now, presume that if you do not make a payment, you will have to make the payment plus the interest. Okay, what they're saying is they will waive the penalty for late payments. Okay, my suggestion is if you have the ability to make the payments, make the payments. The reason being is while yes, we are fearing the unknown, if you have the ability to pay these, pay them. Okay, you don't want to be in a position where you don't need to delay the payments, and then you have this huge tax bill at the end of the year. Okay. Again, my suggestion is try as best as possible to keep the normal flow of operations. If you can't, you can't. And that's why these options are available to you. But if you can, continue to make those payments. Orlando, next slide. This is the last option. There actually were a few other options, but they're not really for small businesses. In fact, this is one of them that really isn't for small businesses. But I threw it in there just in case there is one or two of those businesses that may qualify. If you are an S Corp or you're an LLC taxed as a partnership or a sole proprietorship or anything of those sorts, this is really not going to benefit you one way or the other. This is really for those that are taxed as a C status and have to pay a Florida state corporate income tax return, things of that sort. This is where those entities might see a benefit from this example, this scenario. Prior to 2017, if you had a loss, you could carry that loss forward 2 years. And then if there was any balance left, you carried it forward. They eliminated that with the law, the TCJA law in 2017. And for the last few years, you were only able to carry forward. You weren't able to carry back. Now they've extended or they've brought back for this year that 2-year clawback. So if you show a loss in 2020, you are able to offset that against 2019 and 2018. And of course, if there's any loss left over, you can carry that forward to the next few years. So you have those two options available to you. Again, if you're a flow-through entity like an S Corp, a 1065 partnership, a Schedule C disregarded entity, sole proprietorship, anything of that sort, for the most part, all your income is going to show up on your personal income tax return. This really won't have an impact on you. Orlando, next slide. And at this point, we're going to open the floor to questions. I think we have some time here to answer a question. I know there's some in the chat, so I think I'll turn the floor over to Orlando.
Yeah, and listen, thank you everybody for joining us, and we're going to get to your questions now. If you want to start typing, I'm going to go over right now to see what were some of the questions that were asked. And if you see that I have not responded to yours or asked yours, just ask. So, Senan, can you clarify how the grant, the 10,000, works? How can it be used, and whether it's still you can get it, you can apply for something else, or you don't have to take the loan if approved, right?
Okay, so again, the emergency grant is connected to the disaster loan. So you'd have to apply for the disaster loan to qualify for the grant. Now, the way the grant works is you have to request the grant within your loan documents for the disaster loan, also known as the EIDL. If you get it, it's up to 10,000. It's determined by the SBA. So you may say, I want 10,000, but that doesn't necessarily mean you're going to get 10,000. It's up to the determination of the SBA. They will decide how much you're entitled to, if you're entitled to any amount at all. If they decide you're entitled to an amount in 3 days, that's what's stated on the SBA's website, you'll get the emergency grant funds. You can use those funds for the same reasons that you can use the disaster loan. Any fixed expenses, any expenses needed for the business to maintain itself. And this is very important. The PPP and the disaster loan, these are not loans designed for you to continue operations. These are loans so that you can pay expenses that you cannot otherwise pay because of your loss in revenue. Okay, these are fixed costs in essence, not always, but for the most part, fixed costs. Okay, what I've equated this to is you are being put in a medically induced coma, your businesses, and your business, again, is not making any revenue. So what the government's doing is saying, we're going to go ahead and we're going to pay those bare minimum costs you need to just make it through this ordeal. And the hope is that once you come out on the other side, the revenues will flow, and therefore you'll be able to start paying your expenses, and therefore you'll be able to start paying this loan. Okay, so keep that in mind when you're getting this loan and when you're getting the grant. That is what it's for. It's for the same rules and regulations as outlined for the original disaster loan. Was that everything on that question, Orlando, or is there anything missing? I don't remember.
Well, let me know if that answered your question, Laura. The emergency loan, can any portion of that be forgiven?
The emergency, well, there is no emergency loan. There's.
But it's the EIDL.
The EIDL is not. The EIDL is not forgivable. The EIDL is, you have the time period to pay it. There is the emergency grant that you may be given. That part is a grant. Okay, so you don't have to pay that back. But the loan, the disaster loan, is not forgivable. That is, you have to pay that in the time frame specified within the loan terms, which can be up to 30 years.
And keep in mind that the SBA also has their own bridge loan that is $25,000. Okay, that what they're doing with that one also is actually trying to assist pretty much until you decide to apply for the EIDL loan. We have to find another way to pronounce that.
And remember that the state of Florida has its own bridge loan. It's up to 12 months, and it is an interest-free for $50,000, and no collateral is required. Just remember that it must be paid in 12 months. If you decide you want to take on a disaster loan or a PPP, you can refinance those loans into either the PPP or the disaster loan to make it a part of it, so you can continue to make the payments without being in default to the state of Florida.
And one of the things that we've been doing this for a while, and we've been talking to the small businesses, is making sure, create a game plan and see what specifically works for you. Don't go crazy trying to apply for everything, but look to see where the actual needs are. One of the questions that's being asked, Senan, is so if you apply for the EIDL loan, can you still apply for the triple P loan?
Yes, you can apply for both loans. Okay, and you can get the grant and you can get the forgiveness. But as I mentioned in the presentation, if you are given the grant, the money that you're given in the grant will reduce the money you would be entitled to get under the forgiveness loan portion of the PPP, and vice versa. If you apply for the PPP and you get loan forgiveness, and then you apply for the disaster loan and you seek the emergency grant, the grant will be reduced by the amount of money you got in the forgiveness. Basically, the government is not going to give you 2 bites of the apple for free money. It's only going to give you one. And if it's determined you're going to get X, it will make sure you only get X. How that X is distributed between the grant and the disaster loan is entirely up to how you structure it, but you're not going to get two. You can still apply for both loans. And like, as I mentioned, the PPP only covers certain expenses. So if you have other expenses, and I mentioned one being like insurance, you may want to apply for the disaster loan to cover those other expenses that are not included in the PPP.
Okay, and one question, another question. Will companies that use PEO companies qualify for the PPP?
PEO companies. I'm not gonna lie, I don't know that acronym.
I'm trying to figure out the acronym too, Maggie. If you can.
Yeah, you may have to tell us what PEO stands for.
Payroll company, sorry.
Payroll companies,
Sorry.
if they are, again, if you are responsible for those individuals, those people are on your payroll. You issue the W-2s, you are responsible for paying them. You can use those payroll figures to calculate the PPP. Okay, so it's not about what companies that use PEO. If you use a PEO, it means you're not paying those employees. You're paying a company. You're paying a service. So if that's the case, you don't really have payroll unless you have separate payroll from those payroll companies. So in that scenario, unless you have separate payroll, you may need to go ahead and apply for the disaster loan if you have no other payroll. If you have payroll, you can theoretically apply for the PPP. Remember, you're capped at 2.5 times the amount of your payroll monthly costs. So if you still need additional money, you may want to go to the disaster loan and apply for that one as well.
And it's then more so it's an employee leasing company.
Right. It's the same thing.
Okay.
If you're using a leasing company, you don't have your own payroll. You've leased out your payroll to another entity. So if you have no other payroll to speak of other than that leasing company, your best bet is probably to go to the disaster loan route because you don't have any payroll. Remember, 1099s and individuals that do not report on your own 941s don't count. So you won't qualify for your payroll costs. So in that scenario, you really have to go to disaster loan route. Now, if you happen to have your own separate payroll, then yes, that's separate from the leasing. You have your own individuals. Yeah, you can apply for the PPP.
Okay, so is the PPP loan grant payroll number a net or gross of the payroll?
Gross.
Gross, okay.
Gross. And it does not include employment taxes. Keep that in mind. Does not include employment taxes. So employment taxes is not included in the calculation of payroll costs that you would seek a loan for. So you still are responsible for the employment taxes. Okay, you will not get a loan for that. Now, you may get a loan for that on the disaster loan side. That's a separate scenario. You have to check with the disaster loan applications. But for the PPP, you won't.
And keep in mind that with all of these programs out there that you're actually being inundated with information and so forth, one suggestion that I will tell you that I've been giving a couple of the businesses that keep reaching out is if you're going to apply for the PPP or the triple P loan, specifically, what will your employees be doing for you during that time? If you are going to design and create something new within your business because you decided, hey, we need to go another route because right now this is an opportunity to create, then the suggestion is, consider it. If you're going to, let's say if you're in tourism and no one's traveling, no one's going anywhere and you're paying your employees to be at home, you know what, because you want to take care of them, think of the business as well, because it has to make sense to you, the reasoning why you're borrowing some of this money, the reason why you're actually, trying to assist and help them. But create a game plan. Don't go out and just start applying because you don't know specifically what's happening next. But take this time to create a game plan that makes sense to you, because we want to make sure that you're taken care of during this time and that you don't get yourself in trouble once this is over and done with because you went after all of this and realize it. You're going to have to pay it back unless if it is forgiven and so forth. Any other questions? Inquire, ask. We've got an extra 15 minutes.
So I'm going to type in the chat just in case if you have any questions later on and you don't have any right now, but some pop up. You can always contact me at the following link. You can post your information. You can ask me any questions. Just put your question there and we'll respond to it as quickly as possible. As far as access to the prior webinar, I turn that one over to Orlando.
Yeah, last week, Zoom was actually updating all of their actual their IT, and they actually shifted and changed, so it didn't record, and I thought it was recording, and we couldn't actually put it live. So I'm actually inquiring and asking it because it said it recorded. So I'm trying to figure out if it's in their cloud, where it's at, and so forth. So once I get access to that, if I get access to that, I'm going to make it available to the town of Miami Lakes. I actually want to thank the town of Miami Lakes for everything. And listen, do me a favor. If you want the PowerPoint presentation, if you want me to send you any other resources, I sent a list that I've been compiling of the banks. Some banks that are actually participating in the PP, the triple P. And it's not a complete list. There's over 1,800 banks that actually will be working. My suggestion is, if you want it, email me, because I went in and I assumed that everybody wanted the information and so forth, and I sent it out, and someone sent me an email requesting that I remove them from the email list, and then they called me 2 minutes later wanting to talk to me about helping them. So I don't want to infringe on anybody's, information and so forth. But we do have resources that are out there. If you are looking to access any of this information, I know that the SBA is having webinars to help and teach people how to apply for a lot of these specific loans. I know that there are a lot of entities that are actually assisting and helping. I'm going to send out also, if you want me to send anything else, I will send you a list also of some of the other resources that are available. Keep in mind that here in Florida, we've got a lot of information. There's people in other states that unfortunately may not have the same access, but there are private companies, like I know that Amazon in Seattle, they actually are giving funds to the small business community. So anything like that that I compile, that I research, that I find, I'll be more than happy to assist and help everybody with that. The SBA, the EIDL loan, is directly through the SBA. The SBA is going to be distributing the funds for that. They're actually also, you apply for the emergency loan, the 25,000, or the economic loan. You apply through that. The PPP is through your bank. So make sure that you contact your bank. Specifically, if your bank is not involved in the program, or they're not set up, or they're considering it. Since last week, Friday morning, I was inundated with people letting me know that their bank was not actually participating in the program, or they had some regulations that they didn't meet. So they went out and started looking at applying within other banks. So if your bank is not participating and you're going to apply in the triple P and they're not doing, there are other banks that are actually processing your applications. The one thing that I always tell people, right now, you're business owners. You have to look at this as, hey, I come in and I'm working with you. You have to work with me. And it may come time to make changes within your business and maybe consider banking someone else. I'm not suggesting to leave, but if you really need this, make sure that you do the due diligence. Don't just sit idle. I know people that went to their bank, the bank said no, and they just sat down and waited for me to give them an answer. But there are a lot of banks, especially community banks, that are working with the small business community to assist and help. With that being said, if anybody has, I know that Jimena actually shared something there on the SBA, the website. You can click on that. You can definitely go to the SBA website, sba.gov/disaster. And it gives you all of this information, the links to apply and so forth. I find that people that apply late at night or early in the morning, and when I say early, for those of you that are early risers, 1, 2, 3 in the morning, they're actually having better luck in submitting all of their documentations because computers are actually slow. And I know that they've been having a couple of issues and so forth. So with that being said, are there any other questions? If not, I don't want to keep you on the phone. I want to make sure you go spend time with your family, your kids. Oh, we had a question there, Shannon. Did you see?
Let's see. Makes sense. If we are to be, is Google found here? If we are to be paying our employees now, even though we don't know for 6 days if we are going to approve. No, that's not, I don't think you understood correctly. It's not that you need to be paying their employees now. If you obviously couldn't pay your employees, you can't pay your employees. What you're referring to, remember, there's two different things. There's the loan and then there's the forgiveness. First of all, the PPP doesn't require uh, you pay the loan first. There is no grant also. It's not a grant, it's a loan. You have to pay this back. What the government is doing is it's saying that for the first 8 weeks of the loan, if you seek a forgiveness, okay, that period that you start the loan, and then they compare that 8 week period to an 8 week period last year or the first 8 weeks of this year. If you maintain your payroll, they will forgive that portion, but not the full loan. Okay. If your employees seek unemployment, they can seek unemployment, but it's a one or the other. The whole purpose of there's no double dipping. If your employees, and it could happen, your employees are getting, the whole goal of the program is to get your employees paid. If your employees are getting paid through unemployment, then that's the end goal. But they're not going to say, hey, if you're getting unemployment, hey, you're also going to get paid, because if they're getting paid, they don't need the unemployment benefits. So you can't get them both. And I think that's probably where you may not understand the concept of this. It's to make sure they're getting paid, not that they're getting a windfall. No one is to get a windfall from this program. So if your employee gets unemployment benefits, they're not working for you, they don't want to come back to you. And just so you know, there are some individuals who have done that, where they say, I'm not going back to work, because it's turned out that between the $600 a week they're getting from the federal unemployment and their state unemployment, in some cases ended up being more than they were getting paid from work. So it actually gives them an incentive not to work. And you say, well, what happens in those scenarios? And unfortunately, there are scenarios like that. Okay. And those are some of the things they were trying to work through. But unfortunately, it became a situation where they wanted to be able to provide a benefit now versus having to wait to work out these specifics and determine regulations. It was more important that they got this law out in the way it was than wait a few more weeks to iron out some of the details, such as what happens when an employee makes more under not working than working. But again, this is the situation that we're in. The government felt it was an obligation to roll out a program that probably wasn't 100% perfect, but could actually get money in the hands of people that needed it. And that's what really this goes back.
Yeah, and keep in mind that the triple P is more so to pay your employees while you are staying in business. If you are not in business, if there's no sales coming in, if there's nothing happening that's keeping your business alive right now because you're not essential and so forth, then that's where the employees have the unemployment option. This is more so for a company right now that still is, let's say, actively working, that they still are providing a service, they are essential, or even for a company that says, hey, we're going to take this time to reinvent our the process of what we're doing, look for new revenue streams. And then once we realize that, hey, this is what we can do to stay afloat, then it's going to be easier. That's why I said, don't get yourself in trouble if your company right now is not producing any type of revenue. And if your employees are at home, if you do want to, let's say, if you do have something that's coming in, I know people that actually have their employees working, 2-3 times a week coming in. So it's for those companies that still want to stay afloat and make sure that their employees get paid because they're actually still working.
And I want to make a point, another thing, because I read a little more, and one of the concerns is that, well, what happens if we're mandated to close? Well, the whole purpose of this is so that even though you're closed, your rent's still getting paid, your utility under the PPP anyway, your utility is still getting paid, employees are still getting paid. That's the whole purpose behind this PPP program. You're paying these things until the day you can make money again, until you can open up again. Okay, but it's still a loan. It's not going to be it's not free money. It's, again, up to a certain point, you may get it forgiven, up to 8 weeks. But it is not this, oh, I'm getting this grant that it'll just pay for things while I'm gone. No, it's designed to go in now, because what's going on is there's a lot of companies and a lot of businesses that have rent due, that have utilities due, and they can't pay it. And they are landlords. And while there's been a moratorium issued on evictions and on foreclosures, those are on a residential basis, not on a commercial basis. And while I understand, I've heard that there are some commercial landlords that are working with it, and I applaud them, and I hope that's all of them. That's not the case with everyone. So this is designed to help those businesses that just don't have the means with which to take care of their obligations and have those obligations. With respect to what's going on with the SBA, I've also heard that they have been taking and they're getting a delay in issuing the $10,000 or the less amount of the $10,000. This is an issue that they had anticipated. One of the individuals that Orlando and I know of kind of anticipated there'd be delays. Why? Because they don't have the capacity to handle the number of applications that's coming through. So they predicted this could be a problem. So if you haven't heard, my suggestion is check with customer service at SBA to check on the status of your application, see what's going on. I have a feeling, I can't confirm that because I'm obviously not working with the SBA, that it's due to the fact they're just backed up. And that could be a big reason for that. Oh,
right now, I actually put the slides from the SBA. Right now, they're actually hiring over 7,000 disaster customer employees, temporary employees, to answer all of your questions. There's the link for everything. That's going to be easiest for you to come in and inquire and ask questions. Keep in mind that the CARES Act passed, what was it that sent in 2 weeks ago?
The CARES Act officially passed. Yeah, it's going to be a week ago since last Friday, so 9 days ago.
Yeah, and then on Tuesday and on Thursday, there was already an update that was coming in and so forth. So keep in mind, but keep in mind that a lot of the information that's coming out, that's why we're doing some of these grassroots webinars, workshops, because you're being inundated with so much information. And I see that in South Florida, you know what, they're giving out information and that's great. But our goal, in partnering and working with the town of Miami Lakes is to make sure that you have your questions answered and ask Margie. I haven't heard of anybody that's gotten the grant, but once I do, I'll be more than happy to share and let you know. One of the things that I will tell you is that a lot of the business owners in South Florida, we're resilient. We need to assist and help one another and reach out to some of your competitors or actually reach out to some of your clients and find out how they're doing, what they're doing. Take this time not to sit idle at home. I know some of you probably have your kids at home and so forth, but I do believe that when all is said and done, this is actually going to allow us to create stronger relationships with other businesses within the community and so forth. I'm
sorry, Ronaldo, I did want to get back to a couple of questions that I saw here.
All right.
Ryan, with respect to your question, as far as if you are understood correctly, you are correct. It's up to. In fact, there's a possibility you may not get it. What if the only employee is the owner but not running payroll? I suspect that it's because you're getting distributions. First and foremost, understand that if you are, unless you're a partnership, and this is why it really depends on how you're doing it. If you're an LLC and you're a disregarded entity, only one owner, then you're getting paid and you're getting self-employment taxes out. And in that scenario, you could apply for it in that scenario. However, if you're an S Corp and you're only giving yourself distributions and there's no one on payroll, then you're not going to qualify. So your best bet in that scenario is to apply for the disaster loan. So that's why it really depends on how your business is structured, how you're supposed to be. If you're an S Corp and you're working your business, you should be getting payroll. By law, federal law, you're supposed to be giving yourself a paycheck. So keep that in mind. Let's see. Hold on, the chat just disappeared again. So I personally went to the SBA site this morning, applied for the idle loan. Noticed the same thing. A third party, I had been discussing this, confirmed the SBA had updated its application to make it easier. Yes, they did. They did update the application process. Our contact SBA who spoke with us on Saturday did mention that they made it easier. To be honest, I haven't seen how they made it easier. I do know that they did make it so that it was able to process applications faster because the goal was to get money out to individuals faster. So now the grant itself, again, is up to $10,000. It does not mean you will get $10,000. It does not mean you'll get any grant money. There is nothing assured. That is up to the determination of the SBA. So keep that in mind.
And keep in mind that the SBA has resource partners. So you have the SBA, and the SBA actually provides funding for the resource partners, the Small Business Development Center. at FIU, you can reach out to them. They are actually not only helping with the Florida Bridge loan, they're also helping with the disaster loans and so forth. You also have the SCORE chapters that here locally, you can reach out to them as well. The Women's Business Center, they're based out of in Delray. And if you're a veteran and you want to work with the Veteran Business Outreach Center, they're actually located in the Panhandle. But if you look at the link below, you can actually reach out to and find out help, guidance, anything. One thing is, keep in mind, you don't have to navigate this by yourself. You're not alone. We want to make sure that you actually access as much information as you possibly can, and reach out to people. So if you have any other questions, please feel free to share. I actually just sent you the link for the local assistance and so forth. Don't get overwhelmed. Figure out how you can simplify a lot of this information. I look forward to meeting a lot of you once this is over and done with. I think that there's going to be a celebration. I think that people are going to go out to the streets or do something, take pots or something. I don't know what it is, but be safe, be careful, and don't overthink it. If you have questions, feel free to send me an email. You can actually send and he sent you the link where you can ask questions. I want to thank the town of Miami Lakes for actually, reaching out and talking to me about putting something like this together. It's been a great opportunity to actually assist and help you. So without further ado, no more questions. I want to go ahead and not take any more of your time. This was recorded. I'm going to give it to the town so they can put it up and share it any way that they want to, Willie. And it says we're live on Facebook, so hopefully that'll be on Facebook as well. And if you want to share it, please feel free. So thank you very much. Everybody have a great day. Once again, thank you and be blessed.
Thank you, everybody.